This week, inflation exposed. Prices are soaring for consumer goods, but so have home values.
Building relationships is the way Mutual of Omaha has grown into one of the leading financial services companies in the world. Our reverse mortgage wholesale division is proud to carry on this 100-plus year tradition. To your borrowers, a reverse mortgage is more than a transaction. It's a promise of a better, more stress-free life. Our goal is to provide you, our valued client, with the best service and support possible so you can focus on helping your borrowers achieve the retirement of their dreams.
Welcome back to the Industry Leader Update. Good to have you with us. On this show, I've discussed inflation many times, but more so since 2020. That's when I saw the Federal Reserve pumping in trillions of dollars to our economy and the federal government spending a record $6.5 trillion. Now, after the Federal Reserve's most recent meeting, Chairman Jerome Powell signaled that the central bank is going to remain hawkish on combating inflation.
We're prepared to raise rates further if appropriate, and we intend to hold policy at a restrictive level until we're confident that inflation is moving down sustainably toward our objective.
And they're open to future rate hikes if necessary, despite holding the current Fed funds rate steady at 5.25% to 5.5%. And that's not surprising considering most recently developing inflation data is disappointing. Consumer prices jumped to 3.7% in a 12-month period ending in August. It's the largest increase since January, thanks to soaring gas prices. And it appears the Fed may have lost their battle against inflation, and that's frightening. Now, consequently, Americans on a fixed income or in retirement that will be hit hardest by surging prices. And I say this for two reasons. First is to encourage you as reverse mortgage professionals that despite challenging market conditions and increasing rates, more than ever before, older homeowners will need additional cash flow to help absorb the increased cost of living. And second, to sound the alarm that our nation's present economic trajectory is unsustainable. In fact, in the last 10 years, federal spending has increased 70%, or more than 3 times the rate of inflation and population growth. Now, today, every American consumer is feeling the pain in their pocketbooks. That as a result of our government's unchecked spending, and that's both parties, as the purchasing power of the U.S. dollar continues to decline. And that makes goods and services just that much more expensive. But just how much more expensive? The sudden surge in consumer costs for everything from a gallon of milk to a gallon of gasoline is eating away at American savings and, most tragically, retirement security for older Americans. Now, today, our mission is to show you just how much the cost of goods and services have actually increased in just the last 4 years since 2019, and how the cost of some of those items has often exceeded the rate of inflation. Now, before we dive in, I want to give a shout out to John Williams on This is John Williams' YouTube channel. He's the one who brought this tool to my attention. Thank you, John. Now, let's begin first where consumer goods and services are exceeding the pace of inflation, and that may be due to market forces outside of the US dollar. To do this, we're going to go to in2013dollars.com, and this site shows just how much the purchasing power of the US dollar has declined. You simply input the dollar amount and then select the date range for comparison. For example, if we input 1930, the site explains, $100 in 1930 is equivalent to the purchasing power of about $1,800 today, an increase of over $1,700 in 93 years. The dollar had an average inflation rate of 3.18% per year between 1930 and 2023, producing a cumulative price increase of 1,700%. And that means that today's prices are 18 times higher as the average prices since 1930, that according to the Bureau of Labor Statistics Consumer Price Index. Now, a dollar today actually only buys 5% of what it did back then. So simply said, it would take $1,830 today to purchase what $100 purchased in 1930. And using this inflation methodology, let's see where the price of goods and services are exceeding the rate of inflation. Let's begin with the average cost of a gallon of milk. In 2019, before the pandemic, the average price was $3 a gallon, which if adjusted for inflation, should bring us to an average cost of $3.65 a gallon today. However, the average price of milk now is exceeding inflation, coming in at about $4.33 a gallon, and that's 16% more than the inflation rate during the same time period. And speaking of gallons, let's look at the price of gasoline, which strangely is often nearly the same price as milk. And we're going to go to California because this is the state that is generating the majority of HECM endorsements in recent years. In January 2019, the average price for a gallon of gasoline was $3.23. Today it's $5.32 in California, or 42% more. Again, well above the inflation-adjusted average. And transportation costs have exploded as well. The average price of a new car in 2019 was $37,000. By 2023, it had jumped to $48,000. That thanks to supply chain and manufacturing issues, and new vehicle prices grew as inventories remained constrained during 2021 and 2022. And that too exceeded the standard rate of inflation from 2019 to 2023. But don't forget that the interest rates for both new and used vehicles has nearly doubled during the same time. And that's sending the average car payment to record highs, and that further exasperates affordability. However, if there's one silver lining in all this scenario, it's that retirees and especially older homeowners, they're seeing the historic rise of home prices. The Federal Reserve Bank of St. Louis reports that the median sales price of homes in the U.S. in the first quarter of 2019 was $313,000. Today, even after a small decline, the median price is $416,000. But remember, all real estate is local. In dozens of metros across the U.S., prices are still 25 to 40% higher than they were in their pre-pandemic levels. Metros such as Nashville, Tennessee, where we're going to have the NORMLA annual meeting in a few weeks, there the median home price is still 47% higher than it was in June 2019. Or Miami, Fort Lauderdale, West Palm Beach, where median prices are still a staggering 61% higher than just 4 years ago. And the final analysis, housing wealth is more crucial today to the financial survival of older homeowners than it was just 4 short years ago. Think about that. So what are your thoughts on the current pace of inflation and also its impact on older homeowners? Be part of the conversation. Leave your comment below. Be sure to share this video with other reverse mortgage professionals, or mortgage professionals for that matter, on LinkedIn. We always appreciate you who do that each week. Don't forget we have a YouTube channel where you can hit that subscribe button and the notification bell. That way you never miss an upcoming episode. And each and every week you can catch up on your reverse mortgage news that I curate for you, our listeners, on HECM World Weekly, the nation's only weekly podcast, by the way, for reverse mortgage pros like yourself. We can now be listened to on Spotify. We're still on iTunes. You can, of course, listen here at HECM World or at podbean.com. That's a wrap for us here at HECM World. Be sure to return next week for more reverse mortgage news, commentary, and analysis you'll not find anywhere else. Have a great week.